Hello and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's get right into what's happening in the markets today, or what happened in the markets today. We actually had canola settle up $5.40 at 692.40. We're going to talk a little bit about the market action today in canola. Minneapolis wheat ended the day at 3.25 higher, 592 and 3/4 is where it trades now. Kansas wheat was down 1.5 to 529.50. Chicago wheat was up a little over a nickel at 530 and 3/4. Soybeans took a little bit of a fall today, down 8.25 cents at 1044.5. Corn up 5.25 at 475.5. The Canadian dollar is actually up a little bit today, up about 1/4 cent to 72.55. As the US dollar fell today, we'll get into a little bit more about what that looks like as well. All right. So today's big headline on the U.S. economy was that the economy in the U.S. shrank by 0.3% in Q1 of 2025. This is the first contraction since Q1 of 2022. This is also a quick swing in sentiment, as Q4 of 2024 growth was still a respectable 2.4%. Again, to no surprise, this is due to rising trade tensions and how that weighed on the economy. Net exports fell significantly in this quarter, and imports jumped over 40% as the market was preparing for Trump's tariffs. Much of this was done prior to the April 2nd Liberation Day. Again, just kind of the technical definition of a recession is 2 consecutive quarters of negative GDP growth. This quarter is number 1 of that potential designation. All right, I just kind of jumbled up all the stock markets here. Stock market moved lower as a result of this GDP print today. The 3 major stock market indices that I follow are S&P 500, the Dow, and the tech-heavy NASDAQ. All those showed losses today. NASDAQ was down the most at just under 1%. I kind of put this S&P 500 chart up here as well, just to kind of, all these stock market charts look relatively the same. This big drop here was April 2nd, right after Liberation Day. It's had a little bit of volatility since then and has risen. So today's weakness doesn't really change trajectory of the stock market in any way materially, but it was lower as a result of the GDP print today. We also saw crude oil see losses today, down another 3.3% today. I'm sure the GDP numbers didn't help here, but this is now trading solidly below $60 a barrel and erasing almost all of the gains that were seen over the last month. Crude oil is still well below values of pre-Liberation Day. This big drop was also a result of Liberation Day. And this commodity was one of the most sensitive to possible global recession fears. Today's GDP print, again, didn't help matters much here, although yesterday we spoke about the other weights on this market, which include OPEC planned production increases. Of course, that is having a negative pull on vegetable oils. Soybean oil's down 1.4% today, now trading at 48.6 cents per pound. I know what I know what you think I'm gonna say now. You think I'm gonna say that vegetable oils weighed on canola today, and in some ways they did. I think they limited some of the gains and maybe pushed some of the further out months down. But canola outperformed other oil seeds today. July canola actually finished up $5.40 a ton today. That doesn't seem like much, but in the dying minutes of trade today, gains went from about $2.50 higher to about $6.60 higher before settling where we are now, just about $5. This is a continuation of the pattern that canola corrections seem to have only been lasting 1 or 2 days. So there's definitely some support here under canola. I have more canola charts here to share with you, but before we get into those more interesting canola charts, let's talk about our premium subscription. This is how we pay the bills around here, so please consider subscribing. Just to give you a flavor of what we do, on Friday, we issued guidance on adding to coverage in old and new crop canola as the market touched old highs. We also gave some guidance on how to protect and participate should the market continue higher, and when or if the market comes, when canola does make a new high, if it does, we will be issuing further guidance and strategy ideas on how to capitalize on that. But we only provide that to our premium subscribers. It's only $99 a month, which is less than $1,200 a year. You can also cancel anytime. So the freedom is all yours. And you just go to canadianagmarkets.com/subscribe. To subscribe, I will put a link in the description. All right, back to the fun canola market. So here's November canola. It was in the red for most of the day, but like July in the dying minutes of trade, there was a brief period of trade where it did go positive. Nov canola essentially closed unchanged today, but I think that late session surge of support is somewhat significant. Also, we saw a really nice test of the 20-day moving average here today as well. So, just kind of looking at some of the other aspects of the canola market, we're continuing to track the July NOV spread. This has now widened out to $42.30 a ton. We often see an inverse between old and new crop canola, but when both are rallying up to previous highs and the July is widening against the November, that still signals a physical market shortage to me. This spread also implies that the shortage is going to correct itself by the new year. But the question is it really going to? Here's Statistics Canada's March intention numbers. There's acreage intention numbers at 21.65 million acres. That's a drop from last year, and there was talk of even that dropping further, although most of that talk was when canola had kind of fallen sub $600. The losses in acres, are expected, likely now being put back into the plan. But regardless, does a cut in acres suggest that there's going to be an overwhelming supply correction coming? It sure doesn't to me. Some people argue, yeah, but Brian, yields were poor last year. 36 was the average yield last year. And they might be right. Currently, we're working with a 5-year average yield in our S&D of about 37.9. So what does that make production look like? A little bit higher, about 700,000 tons higher year over year. However, last year, or for this crop year, Statistics Canada stated that there was 2.7 million tons of ending stocks that came in on top of that 17.8 million tons. So the total supply for this 2024 crop year was about 20.5 million. This year, we're not going to see anywhere near 2.7 million tons of ending stocks, likely less than half of that, which means canola will be entering the 2025-26 marketing year with less supply than this crop year. And look how tight we are this crop year. So the question is, have prices risen enough to absolutely kill demand for canola and create a looser S&D for next year? I'm not going to debate that right now, but I want you to. I want you to put your answer in the comments. So let's get some discussion going. All right, rounding out some of the other commodities today, corn had an update today. The EIA data showed ethanol production improving by 7,000 barrels per day in the week that ended April 15th. Stocks were also drawn down on ethanol as well, and this helped to bolster corn as after a large negative day yesterday. We did see some divergence in the wheat markets today. Minneapolis and Chicago were up on the day, but Kansas is still weakening on improving weather and crop conditions. Kansas is made a new low today and did test longer term support. So we still continue to see weakness in the hard red winter wheat market, although we did see green on the board for both soft red winter wheat and for spring wheat. All right, that is all for today. Again, remember to subscribe, A, to this YouTube channel. That's free. And B, to our insights at canadianagmarkets.com/subscribe. Thank you very much. Have a great day, and we will see you again tomorrow.